John Chambers joins us now in a first on CNBC interview. John, great to have you on. Thanks for joining us.
It's a pleasure to be back with you all.
Let's talk about these protests in Hong Kong. I mean, they've been going on for weeks now, but the tensions certainly seem to be rising. How concerned are you about this? And how concerned do you think companies that are doing business in Hong Kong or could be exposed to transportation flows in and out of that hub are concerned?
Well, I think on the big picture, you'll find that the U.S. and China will work through our issues over the next several months. And I'm probably an optimist on that. It's in both countries' best interest to make that happen. In terms of the protests in Hong Kong, I think the Chinese government has shown good restraint, and I encourage them to continue to do that in terms of allowing this to come to a very peaceful conclusion. In terms of business, all this, anytime there's uncertainty, causes people to hesitate. And we remember economic slowdown is nothing more than consumer and business behavior. So the quicker we can get resolution on all those issues, I think we all understand the economic positives that will happen.
John, on trade, do you feel
Yes.
like all of this will, you're optimistic, but do you feel like all of this will prove to have been a waste of time? Do we get a sign today that the president is more likely to back down than the Chinese side of this bargain, in which case we might not get the comprehensive deal that was hoped for?
No, I'm more the optimist here. I start with the big picture. The big picture is the trade imbalance between the U.S. and China was unacceptable. The imbalance was doubling every 5 years in terms of how much we export from them and how much they export from us. And so it had to be addressed, the industrial espionage, the intellectual property protection. So it was the right thing, and it was good that finally somebody stepped up to it. Now both sides, I think, are willing to move. Let's find a quick resolution to it. And I think it will be a fair result in the end. If I had to predict the outcome, that would be what I'd bet on.
The fact that in the coming days, the short-term exemptions on Huawei and suppliers, that dynamic between the U.S. and China is set to expire. Would you expect to see that extended, or do you think it will expire? And if so, what does it do to the global tech supply chain?
Well, I think the global chain is so interdependent, it is very important that they get predictability in it. The issues with Huawei are unique. That has to do with security and with potential bugs in the software, et cetera, that cause the products not to be as protected as you need if you're going to run your national infrastructure, your business off of it. So as they resolve, I'd look for us to work through those issues as well.
John, let's talk about your latest investment from JC2 Ventures. It's into a company, I believe, called Uniphore, which you say is conversational service automation. It's the forefront of customer service. Yeah. I have to say, I like speaking to a person when you've got issues you're dealing with. So why is this the future?
Well, the future will be that you'll completely change how customer experience occurs. It's a $350 billion market growing at 9% per year. What Uniphore does so uniquely is they use conversational AI to help the agents respond properly to the consumer. When you all place a call into your bank or place a call into a retail chain you bought something from, you want somebody who can address your issues and address it effectively. Why it's so important to the market is 2/3 of millennials have switched brands this year because of a poor consumer contact experience. So I think the companies who do this right will have a great future in front of them. But what you're seeing, back to the bigger picture, is startups will be the primary creator of jobs going forward. You're seeing that in China. You're seeing it in the U.S. And Uniphore in particular is an Indian company that now is in the U.S., has increased their headcount from 0 to 20 already this year, probably from 20 to 60 by next year. And it's an example of when U.S. and countries like India work tightly together, how both sides win.
John Chambers, thanks for joining us. Great to see you.
My pleasure as always.